Hello ladies and gentlemen, welcome back to Dre's YouTube channel. Today we'll be continuing our What is Investing series, where we'll be taking a dive into bonds. What to expect from today's video: we're going to explain what bonds are. We are also going to talk about some of the reasons why you may want to consider investing in bonds, and we will also be talking about some of the main risks that you should consider before investing into a bond. So, what is a bond? In simple terms, a bond is a debt security like an IOU. A lender is loaning money to an organization or government, and throughout the duration of that money being loaned, that lender is expecting the government or organization to pay them interest on the money loaned, and at the termination or the maturity date of that contract, which is the bond that we're referring to, the lender is expecting the entirety of the original investment back. So if I were to invest in a $100 bond for say 5 years, each year I am expecting to receive interest on that $100 that I loaned, and at the end of the 5 years I am expecting my original $100 back, and I also get to pocket all of the interest that I collected throughout that 5-year term. If you are wondering, well, why do organizations and governments issue out bonds? Well, from their standpoint, it is an opportunity for them to make money. And in some cases, they could use that money to expand their organization, which in turns can bring in higher revenue. Pressing forward, why would you consider investing in a bond? Well, first and foremost, investing in bonds provides you a predictable income stream. Whenever you invest in a bond, ahead of time, you know exactly what you're expected to make. And you invest in the right bonds, then the interest you are expecting to receive will be received on time, every time. Another reason why you may consider investing in bonds is because it's a good way to preserve capital. Meaning, when you lock your money into a bond, yes, you can terminate that contract early, or you can sell that bond to another investor. However, if you actually let a bond play out through its entirety, you are allowing that money to actually sit and make money. So you're allowing your money to make money, which therefore is also locking it away, keeping you from spending it. Another reason to consider investing in bonds is because it can offset your exposure to the stock market. Investing in the stock market, it can be extremely volatile, extremely risky. The market can go up days and weeks at a time, and it can also go down days and weeks at a time. So investing in a bond is a way to counterpart your investments in the stock market and actually know that that money is working for you. And depending on the companies or the governments that you invest in, you can have the comfort of knowing that your money is at minimum risk. And so you're expecting to get your full investment back in return upon completion of that bond. And last but not least, a final reason why you may consider investing in bonds is because bonds are considered to be low risk. However, only U.S. government-backed bonds are considered to be as safe as an investment comes. If you're enjoying this content, please like and subscribe. And if you have any questions, feel free to leave them down in the comments and I'll get back with you. Thank you. All right, now pressing forward, what are the risks to investing in bonds? When it comes to investing in bonds, we have 4 main risks to consider. We have credit risk, market risk, interest rate risk, and inflation risk. Credit risk is when the organization or the government that you invested with goes default. This means that they cannot pay their debt. To avoid credit risk, government bonds are issued by the U.S. Treasury and backed to the full faith and credit of the U.S. government. So unless you expect the U.S. government to fall, bonds backed by the U.S. Treasury will probably be your safest bet. As a reminder, this is not financial advice. I am just here to share the ingredients. It is up to you to create your recipe to financial freedom. Now, market risk. This is when the value of the bond fluctuates due to changes in the economy. This only matters if you sell your bonds prematurely for profit or a loss. So when you invest in a bond, whatever interest rate you agree to at the beginning of that bond is the interest rate that you're locked in at. So throughout the lifespan of your bond, that company may offer bonds at a higher interest rate or a lower interest rate. If you choose to sell your bond and reinvest, at this point, you're now becoming a victim to market risk, whether you are buying a bond for a higher interest rate or for a lower interest rate. However, if you hold on to your original investment from the start of its lifespan to the end of its lifespan, you will continue to receive what you agreed upon at the beginning of that contract. That now leads us to interest rate risk. This is when the value of the bond drops due to rising interest rates. This also does not matter if you are holding your bonds until the agreed upon maturity date or expiration date. So just how I explained in the market risk, the value of the bonds going up and down due to the market is the exact same thing for the interest rates. All right. And the last and final risk is inflation risk. This occurs when the value of the bond does not keep up with inflation. So this is something to take into consideration with any and all investments. If your investments is not offering you the same or higher return than what the average inflation is, then reconsider that investment. All right, ladies and gentlemen, we have now covered 3 episodes of ways to invest. We went over certificates of deposits, we went over high yield savings accounts, and today we cover bonds. Once again, I just want to remind you all that I am just here to share some ingredients. It is up to you to create the recipe for your journey to financial freedom. Stay tuned for next week, guys. It's going to be an interesting episode where we'll be taking a dive into the stock market and also talking about stocks. If some of you are wondering, hey, I want to know exactly what stocks to buy or, what brokerages to go with. Right now, we're skimming the surface. We want to educate the masses on the different ways to invest. As far as getting into the nitty and gritty, for my personal investments, I will share with you my experiences, things that I've come across on my journey. However, it is extremely important for you to do your due diligence and your research to make the best decisions for you when it comes to your future and your investments as well. Thank you all for tuning in with me today. Please don't forget to hit that like button and that subscribe button if you haven't already. If today is your first episode with me, welcome to the family, welcome to the team. Be on the lookout for more information when it comes to taking your financial knowledge and your financial literacy to the next level and achieving those things in life that you set to achieve for yourself. Thank you all for tuning in with me. Peace, love, and happiness. Dre out.